Good morning, welcome to the ADS Securities Markets Update. It is a light trading week with lack of economic releases across or since the beginning of the week on Monday. However, volatility remains on the rise following the US jobs report and ahead of the Eurogroup meetings on Greece again. Beginning with the first day of the week, the only key data was from Japan. The Q4 final GDP has been revised even lower again towards 0.4% instead of 0.6%, while the estimates were to decline or to be revised is slightly lower towards 0.5%. The Japanese yen again continued to rally yesterday, reaching as high as 122.03 during the US and the Asian session as well. And in the meantime, buying dips seen very reasonable with stops below 118, while the pair may continue to rally in the next couple of weeks toward 125 for now. As for the Asian session today, a few economic figures were released from Australia and China, which had also a notable impact on both Aussie and the Kiwi. But beginning with Australia first, the NAB business confidence collapsed again or declined came in at 0 in February, comparing to a 3 in January, which is also the lowest trading since almost July of 2013. In China, eyes were on the inflation figures today. First of all, the year-over-year CPI spiked more than expected toward 1.4% in February, up from 0.8% in January, while the estimates were only to rise toward 1%. And this is the highest reading since December of last year, and the biggest monthly increase since almost 2009. The PPI also came in, or the year-over-year PPI came in with another sharp decline, declining toward -4.8 in February, down from 4.3%, while the estimates again were to remain stable at -4.3%, and this is the lowest reading since 2009. The Aussie also slipped back to as low as 0.7632 so far today, while further declines could be seen in the next few weeks towards 75.50s, and the Kiwi also fell back or below 0.73, reaching as low as 72.77 this morning, while the weekly close right now below 72.50 is likely to clear the way for further declines below even 72 and even below 0.71 in the next couple of weeks. As for the European session ahead, there are a few economic releases across this session which might also have a slight impact on the market. First of all, in Switzerland, the unemployment rate is expected to rise again toward 3.2% in February, up from 3.1% in January. And in France, the industrial production may decline back by 0.2% in January, comparing to a rise of 1.5% in December of last year. And finally, also in Italy, the industrial production is expected to rise by 0.2%, comparing to a rise of also 0.4% during the same period, which would be also the second monthly increase in a row. Going forward to the US session today, there are also a few economic figures which may have also only a slight impact on the markets. The NFIB, or beginning with the NFIB Small Business Index, it is expected to rise again to 99.2, up from 97. And the wholesale inventories may also or may not show any growth in January, comparing to a rise of 0.1% in December, also comparing to December of last year. And finally, the jobs opening may continue to rise to a record high toward 5.04 million, up from 5.03 million. Finally, as for the FX market, again, the euro fell to another 11 years low this morning, reaching as low as 1.0785 so far, while the key support stance remains at 1.0765 and 1.0740, which should be watched very closely. A breakthrough that support would increase the speculation for further declines or sharper declines toward the parity with the US dollar. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.